Welcome back. You're watching Big Deal and we are discussing the equity market deal flow. Now, Vivek, we have really looked at REITs and InvITs as an instrument, and an important aspect of the equity markets also since the inception. It has evolved. And do you think that in the interest hardening scenario, with its combination of both being fixed and equity component in terms of returns to the investors, that is going to be much more emphatic and play a larger role in the system and for investments? Do you see that already picking up?
Look, in the context of the Indian market, I think REITs and InvITs is something that is just meaningfully starting out. Just the fact that we have so much of a gap in terms of accessing REIT InvIT capital for a country which has a lot of REITable, InvITable assets, if I can call them that, means that I think there will be a huge window of opportunity for REITs and InvITs going forward. Bear in mind, it is a slightly different class of capital, as you very rightly stated, which can flow into REITs and InvITs. You have sovereign funds, you have more patient capital, you have more annuity returns type capital, which happily flows into these instruments. The government has been very proactive, I must say, in terms of devising a regulatory regime. And after having devised the regulatory regime, refining it constantly based on market feedback. And I therefore feel that REITs and InvITs is something that will very, very meaningfully pick up in the context of the Indian market in the short term itself. So yes, I'm very optimistic, much more optimistic on the REITs and InvITs window as things pan out in the short term.
Right. And Vivek, even tax experts like yourself have worked enough with the government to make it a more acceptable instrument. So Salil, the tax benefits have really gone to the public REITs and InvITs as well as the private ones as well. Where are you seeing most amount of traction? What kind of investors and what is the on-ground pipeline looking like?
So, Nicha, we are really enthused about both these products.
Yes.
They're relatively, like Vivek said, relatively new to the Indian markets, but I think the regulators have done a fantastic job to, allow us to get them to the markets in a nice manner. The first set of InvITs found the going difficult because, people probably did not be sure where to keep these assets as, whether they're, in which books, the equity books, the debt books or the balance books and so on. But I think people have, found their own calling around it. The number of investor interest that we've seen in InvITs has just gone through the roof. People are interested both in listed, public listed and private listed too. Even in the private listed category, we see a lot of, HNI as well as, the AIF kind of interest coming in, apart from the, the large people who are wanting to take positions. REITs is a classic category which, gives you yield, but also gives you upside and capital appreciation coming out of, the underlying properties going up. Indians inherently play for capital appreciation in the real estate market in a massive manner. So, so the REITs have given them the benefit of both an yield plus a cap upside. So I think both these categories are seeing both institutional interest within which, institutional private as well as institutional public market. And I would say the high net worth or the retail HNI category, which is, the large ticket investors who are willing to take positions in this. There's a lot to happen, as Vivek nicely put it across. There are enough REITable or InvITable asset categories which are there in the markets in India today. We've just seen, tip of the iceberg, the easy ones, the transmission-based ones, as well as, the commercial office space-based REITs. Those are the starting point ones. And there are quite a few more who may want to tap into this. And, there will be different categories within this also that will come up, the warehouses and the likes, or also, by their inherent nature, either InvITable or REITable assets that will come up. We would expect a lot of action on both of these.
All right. So a lot of action really expected in REITs and InvIT side. And it is a very, unique proposition in terms of the capital intensive sectors also raising capital at a cheaper cost. So definitely an important aspect. But Vivek, I want to understand that where is the momentum according to you? Which sectors are you spending more time on, and which kind of products are you spending time on, and which factors will define whether or not deal flow is going to continue with the momentum it's seeing in the equity markets?
So now on equity markets or within REITs and InvITs?
No, equity market at large.
Look, I think equity market at large, Salil covered the sectors very nicely. I would say only one thing. If companies are fundamentally strong and they have, let's say, a more visible business model, those companies are the companies that will be welcomed by the primary markets. If companies have a slightly longer term pathway to more visibility in their business model, or to more visibility towards profitable cash flows, then I think those sectors will struggle. So technology, tech services, for example, pharma, these sectors are, or all the traditional sectors. These sectors, I think, will continue to be strong. So strong players in the sector will find it relatively easy to hit the primary markets. BFSI should see a fair bit of activity. We've seen some control deals happening already in the private equity space. I think time is right when some of those candidates will then come up for listing on the public markets.
Right.
So from a public market standpoint, I think it's less about sectors, more about the kind of company and the attributes of the company that is going to be able to be successful on the primary markets.
Right. And Salil, even finance minister of the country has made a point that capital markets should be used more for growth capital. Now, so far, the blocks are of the nature of private equity getting a window of opportunity at decent valuations to exit from their holdings. How do you see this momentum in terms of fundraising for growth capital by the companies?
I think blocks obviously are secondary market, so they will be monetization for somebody and an entry for someone else. That's the nature of blocks. But we do see a capital raise, which is fresh capital for growth, coming in the form of both QIPs as well as in the form of IPOs. And there will be obviously certain sectors which will be able to absorb this better. Our sense is the whole manufacturing space in India, which is, the government initiatives, PLI, and others, ensure that this is a sector, these manufacturing sectors generally are of serious interest and can take amount of capital infusion too. The companies in the electronic design and manufacturing space, people who are into the defense spaces, even companies into the chemical spaces who are having expansion plans and so on, general capital goods in general. So those are areas wherein primary markets could be used and will be used as a vehicle for raising some amount of capital. We're also seeing the amount of onus that the government has put on infrastructure.
Yes.
Means that there is, and we've seen this, we've seen the amount of stuff that has happened on the roadside and so on and so forth, means that companies in the infra space, some of them would also need to raise capital. And, we would think that will also go towards some of the capital formation that is there. So I think these are where capital gets built out of the public platforms. We should also not forget, Nisha, that some of the onus of funding growth also has been taken by private equity in the past.
Yes.
The risks of growth and capital formation has been taken in by PE in the past, and it's nothing to frown upon to say that if some of them now use this window as an opportunity to monetize. It's the risk is being taken by private equity. Now it's well built, and now it is distributed to public.
So point well taken, Salil, that of course, if they don't make those exits and don't get the returns, then why will they invest? So proof of that investment is in the returns. But I want to ask you one thing, which is a very significant factor to note, is that is private equity looking at investing at these levels?
So differentiate, Nisha, between private equity investing in markets and outside. today, and it's still just about a month's data point, so it'll be very difficult to draw full inferences out of it. Right now, the month's data point, you would see blocks which are sell side from private equity, but buy side from a larger, broader spectrum of market participants, whether it is long only foreign funds as well as domestic funds.
Right.
But private equities run their private equity business too, right? Which is wherein they've raised capital, which is growth capital, which is getting deployed. Near opportunity. And that investment is happening.
So Salil, running completely out of time, point taken, but that will be one factor that I'll be judging the market when the valuations for, because small ticket investments by financial institutions when sold by private equity is a very small commitment of capital to that particular asset, while private equity takes much more risk with a higher ticket size. And if they come and invest at these levels, that is a real show of these valuations sustaining. But thank you so much, both Vivek as well as Salil, for giving us so many highlights. REITs and InvITs are going to be in action, and some of the ECM deals and IPO window to some extent has opened, not so much probably for the startup industry. With that, it's a wrap. Thanks so much for tuning in.